What's up, ladies and gentlemen? Hope you're doing okay. My name is Mr. GBPFX. In today's video, I'll be explaining to you what Forex is. Materials used in this video are fully inspired by baby pips. So, what is Forex? Forex, or foreign exchange, is the worldwide financial market where individuals can engage in currency trading. It involves speculating on the strength of one currency relative to another, with the potential to earn profits if your predictions are accurate. In the pre-pandemic era, when international travel was common, individuals often had to locate currency exchange booths at airports to convert their money into the local currency of the country they were visiting. This process mirrors the basic concept of Forex trading, where currencies are bought or sold based on anticipated fluctuations in their values. Approaching the counter, you observe a screen showcasing various exchange rates for different currencies. An exchange rate essentially represents the relative price between two currencies originating from distinct countries. Encountering the exchange rates, you spot the Japanese yen and excitedly think, "Amazing! My $1 is worth 100 yen? With $10, I'm going to be rich." In this moment, you've essentially engaged in the Forex market by swapping one currency for another. In the context of Forex trading, if you're an American in Japan, you've effectively sold dollars and purchased yen. Before your return flight, you visit the currency exchange booth to convert the remaining yen you miraculously have, given the expense of Tokyo. At this point, you observe that the exchange rates have shifted. It's these fluctuations in exchange rates that provide opportunities to generate profits in the foreign exchange market. In essence, what is Forex? The foreign exchange market, commonly referred to as Forex or FX, stands as the largest financial market globally. It operates as a decentralized global marketplace where currencies from around the world are traded. Given that exchange rates are subject to constant changes, the FX market is characterized by continuous flux, with rates adjusting by the second. Only a small fraction of currency transactions takes place in the real economy, involving international trade and tourism, similar to the airport example mentioned earlier. The majority of transactions in the global foreign exchange market are conducted for speculative purposes. Currency traders, also known as currency speculators, engage in buying currencies with the hope of selling them at a higher price in the future. To put the sheer scale of the foreign exchange market into perspective, consider that its daily trade volume is a staggering $6.60 trillion, dwarfing the New York Stock Exchange, NYSE, with its measly $200 billion per day. That's trillion with a T. For comparison, if we were to use monsters to represent these markets, the largest stock market in the world, the NYSE, would appear as a relatively smaller creature, emphasizing the immense size of the foreign exchange market. The foreign exchange market does exude an intimidating aura, and for many, it operates like a well-oiled machine. Some might even find its dynamics alluring. In contrast, the New York Stock Exchange, NYSE, often dominates the daily news cycle, featured on CNBC, Bloomberg, and even making appearances on platforms like the BBC or discussions at the local gym. The stock market, particularly the NYSE, is frequently the focus when people refer to the market. It appears grand, makes noise, and commands attention with updates like, "The NYSE is up today, blah blah." However, when you actually compare the scale and magnitude, the NYSE, for all its noise, looks relatively modest next to the expansive and dynamic Forex market. It's a comparison that underscores the vastness and complexity of currency trading on a global scale. The contrast is striking. The NYSE appears almost puny when standing next to the towering presence of the Forex market. It makes you ponder if the S in NYSE stands for stock or perhaps for scrawny. And let's not forget the cryptocurrency market, which looks even more diminutive in comparison. Take a peek at the graph illustrating the average daily trading volume for the Forex market, the New York Stock Exchange, the Tokyo Stock Exchange, and the London Stock Exchange. This visual representation vividly highlights the sheer magnitude of the Forex market, dwarfing even the major stock exchanges and showcasing the relatively modest size of the cryptocurrency market in this expansive financial landscape. Absolutely, the currency market is a colossal giant, clocking in at over 200 times the size of major stock exchanges. It's undeniably huge. However, let's pump the brakes a bit, as there's a crucial nuance. While the overall global foreign exchange market boasts a staggering $6.6 trillion daily, it's essential to note that the spot market, the segment most pertinent to the majority of Forex traders, is a bit smaller, standing at around $2 trillion per day. This distinction emphasizes the specific arena where most individual traders operate within the broader context of the immense Forex market. You bring up a critical point. When we focus specifically on the daily trading volume from retail traders, the portion that includes us, it appears even more modest. Pinning down the precise size of the retail segment in the FX market is challenging, but estimates suggest it constitutes around 3 to 5% of the overall daily FX trading volumes, equating to approximately $200, $300 billion, and quite possibly less. It's crucial to approach the narrative of the Forex market size with a discerning eye. While the overall market is undoubtedly vast, the oft-cited figure of $6.6 trillion can be somewhat misleading when considering the portion relevant to retail traders. Keeping it real, the Forex market is substantial, but it's essential to recognize the specific context and nuances within its various segments. Indeed, the Forex market boasts not only its immense size, but also its continuous operation. It remains open 24 hours a day and operates 5 days a week, only taking a breather during the weekend. Weekend closures? What a bunch of slackers. This non-stop schedule distinguishes it from the stock or bond markets, which typically close at the end of each business day. Instead, in the Forex market, trading seamlessly transitions between different financial centers around the world, creating a dynamic and continuous flow of activity. This constant availability is one of the unique features that make Forex trading distinct from other financial markets. Absolutely! The Forex market follows a fascinating global cycle that starts when traders in Auckland and Wellington wake up. The trading day then progresses through various financial centres, including Sydney, Singapore, Hong Kong, Tokyo, Frankfurt, London, and finally New York. Each location's financial markets play a role in the ongoing flow of trading activities. This sequential movement creates a continuous loop where the market never truly sleeps. As trading wraps up in New York, it begins anew in New Zealand, marking the start of another trading day in this globally interconnected marketplace. This around-the-clock cycle is a distinctive feature of the Forex market, providing opportunities for traders across different time zones to participate in the action. Congratulations, amigo! Now you understand what Forex is. In our next video, we will be looking at what is trade in the Forex market. So make sure you subscribe and turn on the notification bell so you will be alerted when it drops.